Hello everyone, this is class 48 on subject income tax 2. Today we are going to solve one 15 marks question on assessment of individual. And the question is, Mr. Jagdish is running a small business and the owner of a house consisting two identical units. He lives in the unit 1 and let out unit 2 on a monthly rent of rupees 3000. Means he is owner of a small business and he has owned two houses. In one house he is staying, means unit 1 is self-occupied property and unit 2 is let out property, wherein for unit 2 he gets a monthly rent of rupees 3000. Thus annually he gets a rent of rupees 36,000. Municipal valuation of the house is 60,000 for both the house, unit 1 as well as unit 2. If we want to calculate only for one house, then the municipal valuation would be 30,000, that is 60,000 divided by 2 units, so per house we get 30,000. And the fair rent is rupees 62,000, again divided by 2 we get it 31,000. Municipal taxes paid amounted to rupees 2,000 for both the house, that means for one house municipal tax paid is 1,000. Interest paid during previous year 2019-20 on the loan taken for construction of the house is amounted to rupees 6,000. That means for each house the interest paid is rupees 3,000. Other details are as follows. Interest on listed debenture gross amount is 4,000. This comes under income from other sources. Dividend from X Limited 3,500, as the dividend is received from the Indian company, as you are mentioned here as dividend from X Limited 3,500, it is exempted from tax. Income from business 4,50,000. Under third head, that is income from business and profession, you are directly given the amount 4,50,000. Winning from lottery received rupees 70,000. Winning from lottery comes under income from other sources, that is under casual income. You are given received amount. Received amount is net amount. We have to calculate gross amount, and that is calculated as 70,000 into 100 divided by 70. Why? Because 30% TDS is deducted from on casual incomes. That is why remaining balance given to you is 70% of what lottery winning amount that is earned. Therefore 70,000 into 100 upon 70, we get the gross amount of winning from lottery. Next, payment of medical insurance premium. This is considered as deduction under section 80D. Subscription to mutual fund. This is deduction under section 80C. Contribution to PPF rupees 70,000. This comes under deduction under section 80C. You are asked 3 questions. First one, compute the total income for the assessment year 2021 and what is the amount of tax payable. Third is there any scope of reducing the tax? Let us get started. Computation of total income of Mr. Jagdish for the assessment year 2021. As we are not provided any information relating to first head of income, that is income from salary, that is the reason we are not taking first head of income while solving the sum, but we are provided information regarding second head of income, that is house property. In house property, first unit of house is self-occupied property, that means assessee stays in the house, wherein second is given on rent basis, that is called as let out property. So house property unit 1 self-occupied property, always annual value of self-occupied property is nil. That's the reason annual value is nil. Less interest on loan taken. This comes under deduction under section 24. First one is standard deduction 30% on annual value. As the annual value itself is nil, our standard deduction also will be nil. Therefore, I have not taken standard deduction Next is interest on loan. 6,000 is interest on loan for both the houses, but when we consider only for first house, that is self-occupied property, we have to take it half. So the interest on loan for self-occupied property is 3,000. Now we get loss from self-occupied property minus 3,000. Coming to next, unit 2 is let out property, and you have studied this in the last semester, income from house property, wherein municipal value is compared with the fair rent value. Whichever is higher is taken as the final figure, that is compared with the standard rent if Rent Control Act is applicable in that area, but we are not provided any information regarding standard rent in this sum. Therefore, only comparison between municipal value and rental value is done, and the answer is known as expected rental value. So, the municipal value together it is 60,000, for one house it is 30,000. This value is compared with fair rental value 31,000, whichever is higher is expected rental value. So, our expected rental value is 31,000. This is compared with rent received. Expected rental value or rent received, whichever is higher. So, it is 36,000, 31 or 36, whichever is higher is known as gross annual value. So, our gross annual value is 36,000. This is gross annual value. From this we have to deduct municipal taxes paid. For both the houses, municipal taxes paid is 2,000. For one house it is 1,000. So, the balance figure is 35,000, which is known as annual value. From annual value we have to make deduction under section 24. First is 30% of standard deduction, that is 10,500. We have to calculate 30% of annual value. We get 10,500. Then interest on loan. Total loan interest is 6,000, half for the let out property, therefore 3,000. Thus total deduction that we claim is 13,500. Now 35,000 minus 13,500, the balance remaining is 21,500, which is known as income from let out property. Now we have to calculate income from house property. Income from house property is total of house 1 and house 2. House 1 shows the loss of minus 3,000 and house 2 shows the income of 21,500. So, 21,500 minus the loss from self-occupied property, remaining balance is known as income from house property, that is 18,500. This is about second head of income, that is income from house property. Coming to next, income from business. Income from business, we are directly given the amount 4,50,000. Next is income from other sources. Under income from other sources, we are given information regarding interest on listed debentures, which is 4,000. Dividend from X Limited, we assume that the company is Indian, that is why it is exempted from tax. Lottery, 70,000 is received, which is net amount when we have to find out the gross amount into 100 divided by 70. 70 because 30% TDS is deducted from the winning amount, that is why we are given only 70% of it. To find out the full amount, we have to multiply the received amount into 100 upon 70. Thus we get the total lottery winning amount as 1 lakh rupees. Now we get total income from total income from other sources as rupees 1,04,000. When you total all, that is income from house property 18,500, income from business 4,50,000 and income from other sources 1,04,000, we get a total figure of 5,72,500. This is known as gross total income. From this gross total income, we have to make deduction under section ATC, ATD, etc. Deduction under section 80C, investment in mutual fund and subscription to public provident fund. We are given in the sum here, that is subscription to mutual fund 80,000, contribution to public provident fund 70,000. When we add both, we get a total figure of 1,50,000. So investment in mutual fund and subscription to public provident fund, total deduction comes to 1,50,000 under section 80C, and the maximum limit is also 1,50,000. So full amount is qualified for deduction under section 80C. Next is medical insurance under section 80D. We are given information that is medical insurance paid is 3,000. Thus total deduction that we can claim under section 80 is 1,53,000. So 5,72,500 minus 1,53,000, we get total income 4,19,500. Now the next question asked to us is, what is the tax payable? How to calculate tax payable? Once we get the total income 4,19,500, we have studied the income tax slabs in the previous class. That is up to 2,40,000 it is exempted from tax. 4,19,500 minus 2,50,000, remaining balance is 1,69,000. On that we have to pay 5%. Therefore we get amount 8,470. Add education cess at 4% of income tax, that means 4% on 8,004, not 470. Just a minute. Make the correction. 1,69,000 into 5% comes to 8,450. On 8,450, add education cess at 4% of income tax, that comes to 338. Therefore total tax payable is 8,788. Now the third question asked is there any possibility of reducing the tax? Is there any scope of reducing the tax? Yes, there is scope for reducing the tax, as an assessee can invest certain amount of funds in national pension scheme, wherein addition of rupees 50,000 can be deducted. Therefore you can advise the assessee to make investment in national pension scheme, wherein he can claim additional 50,000 rupees deduction under section 80 CCD subsection B. So this is how the 15 marks question on income from individual is solved. I hope you have understood this sum.